Hello everyone, Happy New Year. I just wanted to know is there, can everybody hear me? Okay, I'm just checking out your messages. Uh, okay, all good here, all good here. Everyone's good, great. Before we start, welcome everybody. Welcome to 2016. Happy New Year, and I hope you guys had a good break, enjoyed everything. And I just wanted to show you that when you are in your course section, just scroll down and you'll see all the webinars here. Bonuses and webinars, when you click on that, and that's where all the webinars that we've had in the past, 1, 2, 3, are there with the download link to any freebies or any other resources that I had shared with you. I sent an email with an attachment for a report. I hope all of you read it, because that report gives a lot of confidence as to, and it's all backed by research, and SQM research is a fairly major research arm that does all this research on all kinds of market performances. So that's a report by them, and I was very relieved to actually read that report. So if you haven't read that, I highly recommend that you read it. And there are a few things in the report that are really good, and especially, just give me 1 second, I'll pull that report up and I'll show that report to you. Um, so that's the report, and what I'll do is I'll make this report available with the webinar as well, so you guys can have a look at it. So if you look at it, they're talking about where the market is going, or where the market is at, and that's the forecast for 2016 dwelling price forecast. And they talk about 12 months to June 2015. That's what happened. Perth negative 1.2. We know that because of the end of the mining boom. Brisbane is still plus 2.9%. Melbourne and Sydney are plus 7.8 and 18.9. If you look at, there are three different scenarios that they've rolled out for 2016, and that is basically RBA is going to cut rates by March by 0.25, and what it'll look like for Brisbane, the market would still be at least plus 5 to plus 8. So what they're saying is that the market, there's no slowdown, or the property prices are not falling down. What they're saying is that they're not going to increase as much as they were in the past. So actually, I can't give you that report. I can't put the report on my website because I don't even know if I have copyright to do that. So I just got this report. One of the mentoring students shared it with me, so I thought you guys should know about this report. So if you've got that email, you would have it. Have a look at the report, see how you go, and that's the main section of the report where I find some good information and some good confidence building. So if you're in Melbourne, the property prices will stay at plus 8, plus 13, and that's the plus 4 to plus 7% is the worst case scenario for Melbourne, which basically means that the prices may not go up, but that's where they will still be at. And this is in case the Australian dollar rises above US 80 cents, which is very highly unlikely. And this is in case US dollar falls below the 55 cent or the 60 cents. Now, the Australian dollar against the US dollar is already on that trajectory where it is supposed to touch zero point 0.6 and 0.5. So, which basically means even after China's devalued their currency, it had Australian property has still become cheaper for overseas investors. So I also, everybody that I've spoken to in the industry, whether it's valuers, lawyers, and I'm talking about property industry, and agents from different parts of Melbourne, no one is actually expecting the property market to crash. They're saying yes, it won't grow as fast as it was, and I think that kind of market correction is required because the prices were just going through the roof. People paying $200,000-$400,000 above the market, which was just ridiculous. And the banks need to, the banks, and it's not good for the economy to have that kind of bubble. So that's what's going to happen. And I think after Australia Day, the market is going to pick up again, and it should be all right. I don't see any problem. We're still going strong. I haven't slowed down or not. I haven't stopped taking any action towards getting into a project. So that's one. Another thing I wanted to show you was this email that I got from one of the students who started in the same batch as you guys did. I'll just see if I can increase the size for this so you guys can read it. 36. Okay, I have an update on my progress. I'm in the process of buying my first development site. I've just copy pasted a part of that email. There were some other questions that he had asked which were just related to him, and I just want you guys to know this guy is not a mentoring student. This guy is just doing his whatever the course that he's got available. He's just taking action. He's going for it, and he sent me this email the other day, which is, he's in the process of buying his first development site. It's a 4 townhouse development site. According to his conservative numbers, he's getting a 20% margin on it. He's from Sydney, and he's followed all your other rules for site selection, and he's talking about the demand and supply ratio score, the walk score, public transport, and all those things. He's ready with his finance, and his team of consultants are already selected and are ready to start ASAP. He's made that offer, and the vendors actually accepted his offer. And he's mentioned about your guidance in choosing site has helped me tremendously. I feel extremely assured that my townhouses will still command exceptional sale prices despite the negative economic vibe in the media. I have finished watching all your videos once over and have written notes as I went along. I often return to the videos when I need to clarify an issue and all those. So he's used the 2-minute Feasibilities a lot, and he's talked about he feels no fear, which is good because it will paralyze you, and you won't be able to move forward in this industry. So I have committed myself to the course and to becoming an expert. I spend many late nights reviewing the course videos, doing research, contacting agents, and all the stuff. So he's basically saying he's found the course useful, but he's in a deal. I just wanted to tell everybody that he's gone into a deal, and so I just thought I'll share this email with you. Okay, now this is a feasibility from a mentoring student who's just sent me this. He has joined the webinar. He can hear me, and basically he's here, and I don't know, Craig, do you want to explain people what this feasibility is? If you want, I can unmute you so that everybody will be able to hear you. So if you just send me a message, yes or no, if you're comfortable doing it, I'll do that. Otherwise, I'll explain it, and then I'll go to other. I've got 4 feasibilities that I wanted to just quickly go over of the projects that I have looked at in the past and recently, and the projects that I've discarded. Why have I discarded, and what's going on? So. And I also mentioned that this webinar is going to be a Q&A webinar. So if you guys have questions, shoot your questions and I will address them. So I'm just waiting for Craig to say yes, no, if he wants to. I didn't tell Craig that I was going to do this, but I thought if Craig joins in, I'll ask him to present this. So is Craig there? Okay, Craig's saying I'll let you explain. Okay, so he's got kids running around and there's a lot of noise in the background. So Craig doesn't mind me explaining this. So thank you very much, Craig, and thank you for this permission that I almost took it myself. But I'll just quickly explain this. This is a site that Craig has recently joined the mentoring program, and he's going through. And we've communicated a few times, done a few feasibilities, and we are still doing. And Craig is looking really good because he's taking action every day. He's doing everything that he can, and this is one of the feasibilities that he sent across. This is in Everton Park in Brisbane. The land value is about 620. It looks like Craig's found a really good vendor who's flexible on their terms. They want. Whoops. Okay. I apologize for that. I forgot to silence my phone. So, so that vendor says, okay, give me 620, and I'll let you do something for up until you don't have to pay me anything until the building permit comes in, which is really good. And if you look at the holding costs of the project till that time, it seems a really good deal. But there are a lot of things that you got to eye out and look at. So I'll just go through the numbers quickly. Let's look at land value. Land value is about 620,000. The stamp duty in Queensland and Brisbane is about 4%. And the reason I put 5%, or it's got different brackets. Above $1 million, it becomes 4.7%. And the reason I put 5% is because it covers me for settlement costs, legals, any other due diligence costs that come in. So I put in an extra percent on it so that it covers me that, because it's just a 2-minute fee at this stage. So we are planning to put 6 townhouses on it. Now, how I got that number, I'll show you another field. You guys haven't got this template as yet because I'm still finalizing this. And once this is finalized, you guys will get it as part of your course. Everyone will get it. I'll add it to the course once I finalize this. But there are still some things to weed this out. So I'll just quickly explain it. So this is a section about commercial lease, so we don't have any of that. So what I'm doing here, I'm just going straight to construction cost. I'm putting in demolition. I'm putting in that every apartment is going to be about 72 square meters. And I'm going by some rates that I've got based on my development in Brisbane, which was about $2,900, which includes everything in construction, including the lift, including everything. So basically this is a turnkey price that I've paid for my construction. My construction has 6 variations on it, and I've put this price including the 6 variations. So this could be a little bit lower, but if you were to build apartments in Brisbane, you'll be paying approximately that price for per square meter. Now this price seems a little bit higher because it only includes the area of the apartment. It doesn't include any of the common space, any of the basement, and so that's why what I've done is I've just included all that cost in that area and multiplied that by 72, which is the size of the apartment, and then I've got that figure. I've added 5% contingency on it, and the reason is that banks like to see that, and if you haven't got that in your FISO and it looks really fat, and then you go to the bank and the bank says, oh, what about your contingency? And then you put the contingency on only to find out that the project doesn't look as fat anymore. So it's a good idea to actually put that in the first place. According to Craig, the normal GRV or the sale value in that area should be close to 450,000, and that's what I put. And over here I've just selected. There's another way to calculate GRV. There's some projects that I'm involved in where we calculate the GRV based on per square meter rate. The one that I'm doing in Fitzroy, there's a project that I'm working on in Frankston. Also, it's all about And that's I was working on a project in Frankston, and that's why I developed this, because I felt that every time I wanted to run some numbers like that, my 2-minute Phasor application didn't have those things, and sometimes you got to run those numbers quickly, but in just enough detail so you get a good idea of where the numbers are at. So that's where this numbers come in for land value, the area for every apartment, then average cost of construction for each unit, and this is per unit cost, which is 450,000. Land construction, which includes 5% contingency. Now, when you look at consultants is about 5% of the construction value, which is fine. I actually ended up paying about 94,000 in consultants for my building permit, or DA, up until BA. So whatever I have spent on a 9 apartment project in Brisbane is about that. So about 10,444. But I put in 5% of construction value because that's what I usually use in any 2-minute Phasor. Council contributions. Now, council contributions are very different in Brisbane and very different in Victoria. In Victoria, is very simple. It's based on, if you're putting 4 townhouses on a block of land, it's based on 4% of the land value, and that's why I had put in the council's land valuation at 620 here. So if I was to just put in that, that would be incorrect, because Brisbane, if you're doing 2-bedroom units, so 2 bedders, they are 20. The council contribution is about 20,000. 3-bedroom or more, it's about 28,000. So what I've done here as 15,500 is I've assumed that there is a 3-bedroom house on it. I didn't qualify that with Craig, but I just assumed that there is a there's a 3-bedroom house, existing house on the project, and I'm going to put 6 apartments on it. So that's 6 times 20,000, which gives me 120,000, and I'm going to subtract one house that's already there. So that's about 92,000, and I divide that by 6. That gives me about 15,333, and that's why I have used 15,500 as council contributions per unit in Brisbane. If you were to do the same numbers in Melbourne, you would do it differently. And if you were to do the same numbers in Sydney, you would pick up the phone, call your council, and find out how do you actually allocate council contributions in Sydney. I haven't done a project in Sydney. I've done projects in Brisbane and Melbourne, and I want to do more projects in Brisbane, not because it's just because I'm more familiar with Brisbane now, and I don't know anything about Sydney, and that's the only reason I haven't done anything in Sydney as yet. So that's how I got the council contribution. GST under margin scheme works exactly the same. I've got 2.2% as the marketing cost. Now we've got miscellaneous plus legals. These legals are your off-the-plan contract legals. This marketing is basically your listing price. So if you were to list something with an agent, it is different from this marketing. This marketing is their pure commission. But anytime you go to an agent and say, look, I've got to list this project with you guys, they will charge an upfront listing fee. And they'll charge costs for putting up a signboard outside. They'll charge costs for any mail outs or any letter drops. So those costs are all extra. So I've just allowed extra that, and this is for building permits. So if I've allowed about $30,000 all over the project, so that I'm covered on that portion. And in finance costs, they're usually about 10-15,000 per unit. So that's what I've allowed there. Now, I don't want to spend time explaining what this finance portion is, because I'm going to do another video explaining you how this whole template works and how you can put rental yields and see where you're going and what the growth chart would look like. in every project where your initial investment comes in and your development margin, your rental income, and capital growth. And if you wanted to keep this development, what would it look like? So this is just a quick one, and you only have to add, the capital growth rate in that area, and it'll tell you what it'll look like in the next 5-10 years, and what the rental return looks like, and all sorts of things. So I wanted to add them because I had already developed this application for my investors overseas, because I'm going to, my site's about to launch soon, and I'm going to I'm going to India to get some more investors to do developments here. So and I developed this, so I thought I'll include it with this so that you guys can have that too. So in this scenario, and we put in all these numbers, and it looks like the development margin is about 13.96, about $55,000 per unit. However, we are still in that due diligence phase. We're trying to find out what we can actually do on this, because Craig's called a few town planners, and some of them have told him that you can only go as high as 2 levels, not 3 levels, and 6 apartments require 3 levels. So at this stage, we are trying to iron out all these creases, so when we get in or we make an offer to the vendor, it covers us not getting caught out. So I'm still to talk to Craig about that. We'll have a chat soon, probably tomorrow, about that, and we'll find out what's going on there. So that's one feasibility. That's how I arrive at those numbers. And if this was to come true, 14% development margin on, I think it will be a little bit more, because I've allowed finance costs a little bit dear. The good part about this project is that somehow Craig's found somebody who's happy to wait until we've got the building permit. So which basically means no holding costs at all whatsoever, right till the end minute, and right till we are ready to build. Because you get the building permit, you start construction within 7 days. So you basically managed to hold everything on, and not settle, not pay anything, and no interest, no costs at all. So this finance cost should be lower, and when it is lower, the project gives you about 15% return, which is pretty good. This location is really good, and we're still working through it. So that's one feasibility that I wanted to show you guys, and I'll leave it at that. Got any questions, anybody, regarding the project, regarding this feasibility that I've just showed you? Anyone would like to say something? Because I've just figured out that I can actually unmute the attendees, and you guys can talk and we can talk. So if someone wants to say something, doesn't want to type anything, just wants to talk and ask a question, I'm happy to unmute you. Just send me a chat message and I'll unmute you and you can talk. Anyone? No one saying nothing. Okay, then we'll move on to another feasibility that I was looking at recently. This is I got this project because this site is on Chapel Street in Melbourne and the suburbs Windsor. If you're from Melbourne, you would know that it's a very, very expensive street for anything. Any apartments there are expensive, and so I got this feasibility through my finance broker. Not feasibility, but I got this project through my finance broker, and he came to me saying that we have somebody who's got this site on Chapel Street, right in the heart of Toorak, or heart of Paran, I think. It's and he wants to do something with it. Can we do something? So we went there. We had a meeting with them, and it turns out that they wanted too much for their land, because what this guy had done was he went to a drafts person and just got the draft person to draft 24 apartments on this site, and they drafted 24 apartments on it. So he wants a lot of money, just saying here are 24 crammed apartments on Chapel Street, and that's my price. So he wanted close to 6 million for his site, which was just way beyond for what the site actually was of value. But I did my numbers not on 24 apartments. We looked at the most expensive apartments that was selling in that area, and we found out that those apartments were selling for 2.1, 2.2 million. In fact, this site is very close to an apartment. Everybody knows Harry Potter. Do you know Harry Potter? Daniel Radcliffe. He had an apartment in Melbourne, and this site is actually within a kilometer of that apartment. And he actually put his apartment out on the market for 2.7 mil, or 2 mil, something like that. He couldn't sell it. Then he moved out. Then I don't know what he's done with it, but his apartment was on the market. So what we looked at was that was the sort of area where we could do really high end apartments, and we could sell these apartments for $2.2 million very easy. And so much so that we even thought about putting a car lift that takes a car to your apartment in your where you're living. It's so basically your car's parked in your living room, so to speak, just like we've seen in the movies. So we talked about all of that, and we went to an architect. He did some schematics for us that we could do, and we were prepared to pay 4 million for this because it was going to cost us about 756,000 just to build one apartment. Now that's a very high cost for for construction, but imagine if you're planning to put a lift that opens up, that where you can park your car and it opens up in your lounge room, it's gonna be quite dear. So we thought that if we can put 6 on it, we can afford to pay 4 million for this site, and that would give us 22% development margin on this. So that's what I had accounted for. That was just a quick feasible for just one apartment, what it would look like, and the cost of finance, marketing, because this would require a lot of money on marketing, in commissions, because you want this to be sold for at least 2.2 mil. So that's what I had done with the original 2-minute feasible to put in. But eventually this guy said, no, I want $6 million for this project. And I said, okay, you want $6 million, but I don't want to build 24 apartments. Now this guy didn't even have a permit for it, so we didn't know that whether or not he was able to do it. So he wouldn't budge. And the site, believe it or not, has not been sold. It is sitting where it was as is. I don't know, these guys just decided not to do anything or whatever. It is not on the market, and that's why I really liked it as well, because that's what we could have done. And it is not in the council, and the reason is that the council got some sort of an issue with the site, where council is actually restricting the height of the project, so he can't put 24 on it anyway. If he would have agreed at 4 mil, we could have done this project very easy with 22% development margin. The profit was about 400,000 per apartment, and that's what happens if you get into projects that are really high end and they're risky and all that. But 22.89% development margin on something like this, I could have attracted investors for this project. Would have been very easy. So that's what it is. And I just want you guys to know this one little thing, that things like the price of the land does has never phased me. It it's never like that I'm trying to chew more than I can. I'm trying to take a bite of more than I can chew, because my philosophy has always been, take a big bite and then chew like hell, so that you can make that thing happen. So um, it doesn't phase me, and it shouldn't phase you either. If you haven't got any money in your pocket, but you are doing whatever it takes to find people, you are doing whatever it takes to become that person who can put these deals together, you will find people with money, because the harder part is actually finding these deals. Once you're in the deal, everything becomes a lot easier than initially finding and putting all these people together and bringing them together. And it looks easy up front, but it's actually harder up front. And towards the end, and once you're actually in the project, yes, of course, you got to watch the budget. Of course, you got to make sure that you track everything really, really well. But putting these together and making sure that you've got develop that trust, and you becoming that kind of expert, is the harder part. And if you can nail that portion, I guarantee you'll find investors every day of the week. So um, don't be scared. If you've got any apprehensions, send me a message or send me an email. I'll try and help you as much as I can. But of course, you've got to realize that once you start getting specific to a project, it becomes a different game altogether. So make sure that you look at these projects and see that this is achievable. I don't want you to. I mean, the underlying thing that I'm trying to tell you is that don't look at projects and say, "Oh shit, I can't do that." No, you can do that. Of course, you can do that. So don't tell yourself that you can't do this and you can't do that. That means you trying to put all your you trying to create a boundary for yourself. And I don't want you to think in boundaries. Of course, if you haven't got any money in the bank and you've got no skill, nothing whatsoever, and you expect somebody to give you $1 million to do a project, you can forget about it. But if you've invested in yourself, you know what you're talking about. Look, people will know. People will know in an instant whether you are faking it or you actually know. So if you memorize everything and try and say that, it'll come across. But if you're genuinely passionate about it, it doesn't come across, because you are speaking from your heart. You are talking to people, talking to investors, because that's what I want to do and that's where I want to be. And who's to tell you that you can't do anything? It's only you who's stopping you from doing stuff. So I looked at this. You won't believe. Before I went into this meeting, we had lunch at Fish and Chip Shop, and we had a lunch at Fish and Chip Shop, and we went inside to talk about a $20 million deal. So don't ever think that you can't do something. If you find oil in your backyard, you'll do whatever it takes to make sure that you can cash on that oil. So all I want you to do is to train yourself to find that oil. So if you at the moment the oil price is really low, but it's just an analogy, but I want you to train yourself to be able to find that oil and put things together around it. So and once you do that, you will find investors. You will find people who will get attracted towards you to come to you and say, look, why don't you put it together? So that's another one. I've got two more to go. Any questions? Anyone? Any questions? Okay, no questions. No one's asking any questions. I hope you guys didn't join the webinar and then started baking cookies. So, all right, we'll move on to the next one. the next question is, this is another project that came to me. This is still on the market, and it is very close to where my office is. And this guy is a developer. He's got many projects on his hand, but again, because the market was going up and now the market is a little bit flat, he basically, this guy basically got his hands into too many projects, wants to offload some of his projects. So he sent us this project with 34 apartments on it, and he wants more money for it. But I did the feasibility on this project for 34 apartments for 2 million for the land value, and they were a little bit smaller apartments. It has 2 different lifts because there are 34 apartments there, and there's a basement with car stackers. So all those things are there. So that's the feasibility that I've done. That a 2-minute feasibility that I did on this. And he wanted 2.2 million or something, and I said, look, worst case scenario, we can offer you 2 mil, and I did some numbers on it, and actually I didn't want to offer him 2 million at all. Some of the partners that I work with, they said, now we'll get 2 million, and we can do this project and so on. So we haven't done this project. The reason I didn't do it because it's 34 apartments. Up to 10 to 12 apartments, I've got no issues in the current market scenarios. 34 apartments in this scenario, the only reason I wouldn't do it at this stage is because I want to get into a project, turn it over quickly, and if you've got 34 apartments, there's longer pre-sale period. So that means for me to get my construction finance, the property has to be on the market for a very long time to have at least 50% pre-sales. And that would mean that I might be sitting on the market for 3, 4, 5 months to get my pre-sales ready, which means more holding costs for me, which means I can't do anything even when I'm in the project. So that because of that cycle, I don't want to do a project that is more than 12 units, whether it's apartments or townhouses, because up to 12 it's manageable. They can move in a good location, they can move fairly quickly. But 34, I didn't want to do it, but we did some numbers on it, so I'm sharing those numbers with you. The GRV of the project was 16.8 mil. We would have paid about 2.12 for land, about $10 million for construction, including that, about almost 400,000 in consultants, and council contributions would have been close to 318,000 in this scenario. And I got this number from because this guy already has the permit on it. So I called up the council, looked at the permit conditions, and I found out what the ballpark number was, so I put that in. And the GST with margin scheme, some marketing, project this scale requires at least 3% commission. I put in 3% because I wanted to add some stuff. I didn't know what else would be required for a project this scale. So I added 200,000 in miscellaneous and 450,000 in finance. The way I've added 450,000 in, actually I forgot to, I'll just quickly go back and explain it to you after I finish this. But I put 450 here because if I can get 70% finance based on my GRV at 6% interest, my 12-month interest cost is about 706,000. However, when I get finance for construction, it is only based on the amount that I draw down based on the progress claims that I make every month or after every stage. But and the way to do that, it goes in an S curve, and I've already taken care of that in the main feasibility application because that's how it works. But when you do a 2-minute feasibility, you got to make sure that it's in an S curve. And what you do to be able to figure that out is you multiply the interest costs for the whole year by 0.6, which is basically 60% of that. So if you were to calculate cost in an S curve and you've got a 12-month interest cost, multiply that by 0.6, or 60% of it is what you should be taking into account in your feasibility. If I put 704 here, this price is going to drop even further because there'll be nothing left there, and then that feasibility would be wrong because I I would have let a perfectly fine deal go because I put in the wrong number for finance. And the new application that you guys will get, which I mentioned earlier, this one, I've already taken care of that. So keep an eye on it. There'll be a video explaining how to use these finance costs, and in here you'll be able to calculate the upfront developer equity contribution that you would need up until the DA or the planning permit, and then DA and BA. This is up to getting up to the building permit, getting ready for construction, and the construction finance that we will be ballpark construction finance that you would need during construction. So it talks about the upfront equity that you might need. So if you wanted to know what would it cost you to do a project like this upfront, if you were to settle on it and then spend your own money to get to the building permit, it'll be close to 347,000. So if you got 347,000, you could get into a project like this. So this is just calculating these costs, but not all of it is required in a hit. But this is based on, you will be able to borrow 80%, but that means you need 20% deposit. Then you need some money to get to the building permit, because you don't want to run out midstream and say, look, oh, I didn't project the cost. So you'll have this soon, and you can still calculate all these costs from the full-scale financial feasibility application that you already have. So if you were to not use the 2-minute Feasibility and put the same numbers into the full-scale application, that still tells you your upfront developer equity contribution as well. So this is, well, where did I go? So I didn't end up doing this because he wanted 2.2, and I looked at it, project this scale, and for me to risk all of that, I want to make at least 20%. And I told him that, look, I can give you 1.7 mil, and then he got offended because I had asked for 1.7 mil. So he said, you don't know what you're talking about and all that, blah blah blah. And we didn't have a deal, but that's what I was willing to pay for this 34 apartment project. Any more questions? Every time I ask any more questions, I get an opportunity to sip my coffee. So if you guys got any questions, you got 2 seconds until I sip my coffee. Okay, I'm back, and this is the last one that I wanted to discuss with you. This is also from another mentoring student. He's recently joined. He came to me. He wanted to get this project, and I've quickly done some numbers on it. And what he wanted to pay for land, I said, no, that doesn't stack up, because it was, I wanted him to get, because it's a small 3 townhouse project, I wanted him to get at least 14% development margin. And I said, look, that's the maximum that you should pay. And because it was 8.66, he wouldn't. I asked him not to do it. So that's the numbers that we got, 600,000. Then we did some numbers. This is also in Victoria, and we went with $1,500 a square meter, and the council contributions, all those things. But because this project didn't give me the money that I wanted for this, I asked him not to go ahead with this project. The address was 14 Banbury Street. I can't remember what the suburb was, but that's what it was. We did some numbers. We went to and fro a few times trying to find out more details about the project. Now, he could have done a lot of stuff. We even spoke to somebody who does traffic, who we knew in traffic management, because this required a separate entrance for one of the townhouses, and the 2 townhouses were built at the back. And I decided to let him know that, don't do this project. So we didn't do this project again, because three townhouse project, yes, very good, no problem. I'm happy with a 14% development margin. I'm happy with a 15% development margin, or even 13% development margin is fine because it's a three townhouse project. It's very straightforward, especially when you do a townhouse project. It's very straightforward. Not a lot of consultants are involved. There are not a lot of there's no far engineer coming in to do a report. But the moment you get into apartments, you need like a apart from the normal traffic management and all that, you need so many other different reports. It's not funny. It's like we've recently hired a consultant whose job is to basically make sure that all the wheelchair access to the entire apartment complex is available, and if there is something that we are not offering, whether or not we can get a dispensation for it, that's there, and that's 2.5 grand, just his initial engagement fee, and then there's going to be another free structure, just to get him. So this is a guy who just consults developers if they want to build an apartment building and there's wheelchair access, which is mandatory and everyone should provide that. But what I'm saying is that a townhouse project is fairly straightforward than an apartment project. And at this stage, because every developer in the country has just gone out, started doing apartments, if you are getting into an apartment project, make sure that there are not a lot of apartments around you, so that you don't get caught out. However, it just depends upon what the location is, and that's why the front portion of the course talks a lot about choosing your location wisely. If you had apartments and you could walk to Harvey Norman from your apartments, you could go to the grocery store from your apartment, or you were very centrally located, and it was a very good location, you'll still sell that apartment because a lot of people want to live there. But if you were in, I don't know, a little bit far away from a more desirable area to live in, and you wanted to put apartments there, just because it stacks up, I would recommend that you don't do that, and stick with townhouses. Again, with townhouses, when you are doing your feasibility, make sure that the end value of the townhouse is not equal to the end value of a house that's already there with land on it. Because if it is the same, you should not be in that suburb. That means the development wouldn't work in that suburb, because if you can spend $650,000 and get a 3-bedroom apartment on a 240 square meter block of land, and you can spend the same amount of money and you can get an old house on a 700 square meter block of land, where would you spend that money? I'm pretty sure if you were you would go and spend that money on the 700 square meter block rather than the 250 brand new townhouse. So, but then again, in the demographics, a lot of people, not everybody wants to be a property investor. Not everybody has that same mindset. People have 9-to-5 jobs. They go there, they finish it, and after that, they don't do anything to further them apart from their 9-to-5 job. And they're different people, and they don't think about these things. They just want a brand new house to live in, and they will still do that. So it just depends upon location, and it is everything like that is a very case by case scenario. So that was my last feasibility for the night, for the thing. We've got. I'm happy to answer more questions. I can unmute you, whoever says I want to talk to you, and I can unmute anyone who wants to say hello, and we can go from there. I'll wait. I'll have a sip of my coffee, and I'll wait for anybody to raise their hand. And if you do, I'll unmute you, and we can have a chat. If you don't have any queries, do you want to tell us where you are at and what you are doing? I don't want to pick on people, But if you wanted to tell us what you're doing, where you're going, how are you tracking, how are you finding the course, that's also fine. Anyone? Nathan, Ruth, Craig, Ken, Isaac, Satish? We've got a few people here. Okay, no one said anything. Okay, guys, then this would be the end of the webinar. If you've got more queries, go through the course, look at more projects, and before the next webinar, send me your Q&A so I can address those queries in the webinar. So, welcome back. The year's about to kick in. I think after Australia Day, everybody gets serious. Schools reopen, and everyone's back at work. So I wish you all the best. I think 2016 is gonna be an amazing year, and I'm pretty sure that if you guys are serious about this, you will all be in a deal very soon. And another request. I actually have a request. I'm actually about to launch the course again, and I'm starting advertising and everything. And if you really like the course and you find the material really good, I'd really appreciate it if any one of you could do me a video testimony, just introducing yourself, why you joined the course, and how have you found the course so far, or the webinar so far, and just be genuine about it. Yeah, just say some good things about me, that's all. So yeah, if you can, there's no compulsion. It'll really help me because I want this to reach more people who can go through more stuff, and I have a very reasonable entry point for the course. And if you could help me out, that would be great. And all you have to do is use your smartphone, record a video, what you think, how you're going, and if you really like it, say that you like it. If you would recommend it to somebody, that would be great. You can say that in the video, and I'll really appreciate if you could do that. So, but no compulsion. There's no pressure on this, and I'll still love you if you didn't do it. And I will still wish you all the very best and all the success for 2016. You guys already have it in you. Make sure you go out and do this thing. So all the best. I still haven't got any queries. Okay. Oh, I got a few questions. Sorry, I've got to move that. I've got to scroll down. Still getting through the course. Okay, I'm looking at deals, and you're finding properties overpriced. Keep looking, I would say, because unless you are looking, you will not be in the game, and you have to be in the game because you will find them. Maybe their feasibility, there are some stuff that you're allowing for more, which is killing the deal. My question to you is that if you're looking at deals and you find them overpriced, are they getting sold at that overprice? If yes, find out why. Find out from the agent. Find out, that means there's some gap between your feasibility and their feasibility. Of course, there are a lot of idiots out there who would pay a lot of money and they'll just get it, and they'll still pay more and they'll just keep doing. Or you could be competing with the builder, because a builder can actually get a lower development margin because there's also a margin on the building side. So yeah, that's what I would recommend you to do. I'm all good at this stage, although is there any other people from Perth listening? I'll have to check, Nathan. I'll have to check my database and see where everyone is from. And if there is somebody, I will let you know for sure. If you don't hear from me, that means there's nobody on my list from Perth. But I will definitely check it and get back to you on that. I like the layers concept in Google Maps. It's pretty good. I use it all the time. I think I have already sent you. Now Google Maps is very different. You actually have to go to the Map Engine Pro, which is actually not Google Maps. It's called My Maps, and that's where you go and create those layers. So that's where. Sorry, I'm just addressing one of the queries regarding layers. You can import stuff and see what they look like. I've got so many maps like these. I'll just quickly show you. Um, just give me 2 seconds. Just bear with me for 2 seconds. These are all the maps that I have created in the last few years of the areas that I was looking at, what I was looking at. These are all the maps that I've created and imported stuff um, into my map to analyze a street, analyze a property, and see what everything was selling. So this is just my research just for the suburb Chelsea. I've got maybe 2 maps like that in Chelsea because I've just finished a project in Chelsea. This is my second project in Chelsea. And just give me 1 second. I'll see if I've got. This is the project that I'm building in Chelsea right now. We're already at the base stage. Just wanted to show you some photos. We just got them. We've just filed our first progress claim. This is the project that's being built as we speak every day. So this is right next to the beach. Like that's the beach. Like if you walk 50 meters, you'll drown. That's how close the beach is from the house. So that's what it was. These are just that's me here on the site. This is my backside here, and I was there for the progress claim. And what else? This is my builder. This is me in the background again, and this is what the site looks from outside. This is the rubbish pit. So that's what I'm doing as of now. And I think I ended up closing my but anyway, that's what before I did this project I actually went to make sure that I don't know where did I've just accidentally closed it. So that's how you can import data about different properties that are on the market, and you can basically get a good idea of what they would sell for in that area. So there it is, and that's what I did when I was doing this project and the project before this. I put down what everything is selling for, and I mark my property in black. So that's us in black. This is the project that was the photos that I was showing you, and I wanted to see what was selling close to it and what I could list it for. So the land there was land that sold on this street just further up, and that sold for $2 million, which was a 5-bedroom house. And over here, so yeah. And you can click on house, and you can different layers that you can use to map all this property data. Just give me 1 second, my throat's drying out. To map this data to make a better decision and analyze what you're doing. So anything that I'm actually teaching you guys, I do all of that. It's not like I'm just teaching that. I do all of that to make sure that I haven't left any stone unturned in my feasibility, in my due diligence. So this is the project that I'm doing in Frankston. So I'll show you some more some more analysis on the site while it loads. Another one, are we able to invest in any of your developments, seeing as though you are seeking investors from India? I'll address this question 1 second. This is the analysis of all of Frankston, what I'm doing, what's going on there. So this is that project. So and each one is a different one of his house unit and all that stuff. So going back to the question, are you able to invest in any of your developments, seeing as though you are seeking investors from India? I am seeking investors from India because investors from India are allowed to come in and invest, no problem at all. But it gets a little bit difficult for me to put projects together where I can attract people from here, because ASIC will look at it and say, because I'm in a better position than my student, they would say, oh, you're exploiting them, and they have so many different regulations that you have to go through in order to do that. When I actually I've put together projects like these where I've got other investors with me, but that I did them when I wasn't teaching this stuff, and those people I knew through networking and everything. So it wasn't like, I was in a position where I was teaching or charging them money to teach something and then saying, why don't you come and put money in my project? So I don't like to do that. However, it's not a hard and fast rule where I'm not allowed to do that. And if I was to do something like this, I would say if I was to offer you something like this, it would have my money in it. So that you guys have a level of comfort that my money is also in this project. So if a project that scale comes around, yes, I will. I am looking at a project which is 1.4 million at this stage, just for the land. I need 1.6 million to get it to the building permit, so that it's ready for construction. It's 8 townhouses. Each townhouse can be split into. It's actually not a townhouse. It's going to be like a townhouse in a building, but each floor can be leased separately, which would bring in a rent at about $1,000 a week or something. Now, the thing is, because it hasn't got a permit at this stage, but I have gone to consultants and confirmed that that's possible. I even have drawing schematics on it of what it would look like, but because it hasn't got a permit on it, I can't sell my students or anybody something that, this is the dream, come and put money in this and that's what we'll do. And then if council says, no, you can't do this, or we hit a snag through the development process, then I look bad because I've just gone out and taken money from my students and they put money into the project that didn't deliver what it was supposed to. And I want a really clean record for myself where I do want investors, but I would really, for me, the litmus test to get somebody to put money in a project is that, would I put my money in this project? If the answer is no, I would not ask anybody else to put in. However, I would also put money in some projects where all my consultants and all my research tells me that this is very, very likely. But because you're fighting council, you're fighting, you could be objections. People could take you to WCAT. WCAT, if somebody takes you to WCAT, you won't get a hearing for 6 months. And the 6 months, the project stalled. And then my investors are saying, oh, you took my money and you said you'll deliver the project in 12 months. And, it's been 6 months. We've got to wait for the WCAT decision. And all those things kick in. So for me to attract investors, I've got to be fairly certain. And you realize that when you are very certain, you don't get a deal where, it is for sure that you don't get a deal where you'll make more than 14-15% development margin. So if you are willing to look, I'm looking at projects every day of the week. That's my job because I'm not a builder. I mean, I've got a builder who looks after the construction side of it. I track the budget and everything. But what I'm saying is that my job is to keep looking at deals every day, keep bringing deals together so that we can do those deals, get the plans, permits, everything else ready so we can execute the deal up until handing it over to start building. So I look at deals every day, and there are a lot of projects on the market at this stage with plans and permits. So either you find friends that you can get together and you do the project with them, or if I find a project where I would say, you can come together. Look, if any one of you is interested to do like a 4 townhouse development, where at the end of it you guys will keep that one townhouse and not sell it and have that equity in it, you will be able to find that project so quickly it's not funny. And we build projects in 6 months. We can build 4 townhouses, 6 townhouses, 6 months flat. We can build like 16 apartments or something that we're going to build in Fitzroy. We've got a construction timeline there for about 12 months. But that's because it's an apartment building. It's got a lot of stuff involved in that. So yeah, that's where I'm at with it. But if I do have a project which I think is really good, my students can do it, I will definitely present it to you. I have another mentoring student. He's at the moment is looking at all these projects, and he's asked me that I'll find a project, but will you be able to offer this to your students? And I said absolutely. I'm actually seeing him tomorrow. But he's in Melbourne. I'm catching up with him tomorrow. He's got a few projects. He's got some plans that he wants to discuss. So if he comes together with the project or something, I will offer that to you. But I do need to understand that you are serious and you want to do this. I do not want to look like that. I'm pushing it to my students. I'm not that kind of person. I want to make sure that all my students get this, and I really want my students to do really well. So it's I won't take you to mining towns. I won't take you to to places where I think that it's not good. So that's that. Okay, Nathan saying thank you. I checked your Windsor development last week, coming along nicely. Yes, it's about to be handed over to us in end of February. I think end of February is when I'm expecting it to be handed over to me. So thanks, Ken. Thanks for checking it out. And yeah, how many units? Is Nathan asking me how many units? I'm sorry, I've just got to that chat message now. I don't know which. Are you talking about my development? My development was 9 units. What are you expecting the sale price of the finished unit? This is for my unit, or this is for okay, I've got this message from Ruth saying that if 4 students get together and 4 of us will keep 4 townhouses each. She is interested, and it's not up to me to find the project anything for you. But what I'm saying is, if you guys send me an email saying I'm interested, if any of your other students is interested, I'll introduce you to, and you guys can talk to each other. Then you've got 4 minds looking for the project. It could be 4 different areas. You increase your probability of getting into a project, and if you were to do that, I'll help you put it together. So it's as simple as that. So send me an email if you are interested in doing a project with one of the students who are already in the project. So if yes, send me an email. Once I've got 2, 3, 4 emails, I know these are the guys who wanna. I'll send you each other's phone numbers, and you can start talking to each other and start start putting together some things to do for each one of you, so that you guys go and you finish it. So Nathan is asking me, what are you expecting? Chelsea ones. Chelsea ones are going for 1.1 and 975 and 950 or something. So if you wanted to see where they are listed on the site. You can buy them. I was actually just looking at it at them this morning. Just give me 1 second. I don't know why. It's just going a little bit slower for me. So that's the listing here, 1.1 to 1.8, 1 million. Then we go 975 to 1,030,000. That's what they look like. So if you are interested, I could offer you a good discount. They're 4 units, and they're on the market for selling at the moment. We only listed them just before Christmas, and nothing picks up until Australia Day. Once Australia Day is good, I think we should be done. We're finishing the construction. The way we've got the construction loan, it's fully funded, so we've started construction without any pre-sales, because we didn't want it to miss the summer period, because this is right next to the beach. So people would be going to the beach, their cars parked outside. When people go to the beach in the evening, everybody sees that they are coming in. So we didn't want it to waste that time getting pre-sales, and we wanted to start building so that they are all ready. So they should be ready in June. So yeah, that's what's going on. And believe it or not, I actually wrote the listing description is written by me, because I didn't like the description that the agent came up with. So I try and put details in about how far they are. Like if you look at the listing, you'll see that I've mentioned 700 meters from train station, 50 meters from the beach, 400 meters from the nearest supermarket, 600 meters from the school, 750 meters from Chelsea Primary School. So I do practice everything that I teach. So if you've picked up a location like that, you shouldn't worry about it. And not only that, I mean, we're 3 partners, and we all want to keep one each towards the end. So we'll see how we go, but at the moment they're on the market. If somebody wants to buy, we want to mitigate our risk and reduce the loan amount. So that's what's going on, and I hope you enjoyed this webinar. It's gone over an hour, and that's no problem. But guys, once again, if you like the course, and if you liked what you've learned, I'll be really grateful if you could do me a video testimony that I could put on my website, or use in my basically use on the website or on Facebook or something. So I'll really appreciate if any one of you could do that for me. So I wish you all the very best, and I'll see you next month for the next webinar.